Welcome to the Real Estate Asset Management Podcast, brought to you by Break of Day Capital. The show focuses on educating syndicators and apartment owners on how to build systems and manage their properties more efficiently to become a best-in-class operator. 100% straight talk. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Asset Management Podcast. I'm your host, Gary Lipsky. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and helping one another.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today, I want to talk about how we look at opportunity. I'm going to talk about a deal I closed at the end of 2021. This was an off-market deal, value add 72 units in Tucson, Arizona. This is a C-class property in a B-class neighborhood. What this means is this property needed some love. It's a good property, but the owner had it for about 20 years, so it needed quite a bit of updating, as it's in a great neighborhood with lots of good restaurants and a lot of medical buildings across the street and in that surrounding neighborhood. Typically, I prefer buying 100 plus units because the economies of scale. And I mean that in several ways. One, it takes the same amount of time to manage a 72 unit as it takes to manage a 100 unit or 150 units. So I get more bang for my time from an asset management standpoint. Two, there's staffing. Ideally, you'd have one maintenance staff and one office staff for every 100 units. Now, rarely does it fall into place at exactly 1+1 per 100 units. So I'll be paying a little bit more for my staff per unit because it's 72 units versus 100. Now, I can opt for not having a full-time property manager and maintenance person, but that would mean I could have potentially more turnover because the staff may be looking for full-time work. Or I might have someone that has less experience than I want working for us because we're paying less. The reality is we're going to have lots of turnover in the first year as we improve the property and raise the rent. So that will take up a lot of time for the leasing agent. And additionally, on the maintenance side, he's going to be doing lots of turns and renovations over the first 2 years. So he's not going to have a lot of free time anyway. So 72 units isn't that bad. Obviously, a lower unit count may exacerbate some of the issues I talked about, but there's also less competition and potentially more upside due to more mom and pop owners that I have and my investors have as well. Speaking of mom and pop owners, the seller of this property wasn't a total mom and pop owner as they own a bunch of other properties. But like I said, they've owned this for 20 years or so, and you do your CapEx in the beginning and you do the bare minimum going forward. And that's usually a good sign. Pause. That's usually a good sign because owners that hold their properties that long, 20 years, typically don't push rents nor update their properties. And that screams a ton of opportunity for me. The property had old signage and an old look to it. Paint can do wonders to a property, and we're going to liven it up quite a bit and change the branding from Ironwood Apartments to Icon Apartments. I like the new name so much that we're going to use it at another property we're purchasing and calling it Icon on Park. The units are big with high ceilings and huge patios. Almost every unit has a patio or balcony, and they are bigger than a lot of apartments in New York City. I mean, they're huge. We'll upgrade the flooring, new countertops, appliances, cabinet fronts with pulls, fixtures, and add low flow toilets and shower heads to save 40% plus or minus on the water bill. Speaking of saving money, we'll also switch out all the windows to double pane to save on electricity, as they're very old, ugly, and paper thin. Some people just put like a screen on the windows. That's a cheap way to go, and it makes it a uniform look. You'll save a little bit of electricity on there, but for a little bit more, we're going to get a huge upgrade. It'll look much nicer. We'll be able to, keep the cold in or the cold out, whatever time of year it is. So it'll be a huge benefit for our residents. The classic units alone at this property are $270 below market rents, which is huge. And we can add another $100 to units that will be upgraded. So there's going to be a huge loss to lease in the first 2 years. It takes time to recover all of that. Finding a good opportunity is great, but you have to be able to execute on your business plan as well. And it doesn't magically happen. You've got to make sure your property management team and whoever is doing the renovations, which can be one and the same, clearly understand the scope, budget, timeline, and you have to hold them accountable. Delays, costly overruns, poor quality can quickly sink you if you aren't paying attention. We use a tracker we created in Excel to monitor everything, and a Google Doc for our whole team to use for accountability and timelines. I say timelines because you want your rehab team to have everything they need for the renovation ready to go before they start. You don't want a vacant unit sitting while you're waiting on appliances, flooring, light fixtures, or whatever else you need. That's money wasted. Knowing how long it takes to get each item you need and even have an extra kit or two on site allows you to make sure you have everything ahead of time so you can quickly renovate the unit and get a resident paying in there ASAP. Besides materials, you want your reno team ready to go as well. You don't want to wait 2 weeks to get on their schedule. If you waste 2 weeks on 30 apartments at $1,000 a unit on a 4-cap, that's $375 in value you've let slip through your fingertips. You're doing a disservice to your investors if you let that happen. So you want to stay on top of that. Some people like to wait when they take over a property and see if there are any issues before getting started with CapEx. I want to jump in right away. Now, I've got a buffer in my raise and CapEx budget so I can pivot if I want to do something, I didn't plan for. But I want to show the current residents right away what we intend to fix up the property, and in turn, what we will charge a premium for that as well. I don't want to be going through bids and booking subcontractors to do the work well after takeover. Try to get the most of that done ahead of time. A lot of property managers or property management companies don't move at your speed. So make sure you communicate what you're looking for ahead of time, before you start with them. Now, I'm really excited to see our hard work come to fruition. The property is looking great. CapEx projects are underway, and we're changing the image residents have about the property as they've been impressed on how we tackle work orders and the new look. We do have a ton more work to do, but it's great to see the progress. Well, that's a wrap for this episode. I hope you found how we look at opportunity informative. I'll be back next week with another episode on the Real Estate Asset Management Podcast. Thank you.
To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and review this podcast, as it will help us grow our audience and reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website, breakofdaycapital.com, and sign up for our newsletter and or fill out our investor application. We'll talk to you next week.